Now, as we have discussed already, there are mainly five heads under which income can be charged to tax. Those heads are income from salary, income from business and profession, income from house property, income from capital gain, and the last is income from other sources. So basically all those income which are not chargeable to tax under above mentioned five heads will be chargeable under the head of income from other sources. However, let's talk about certain incomes which can be charged under income from other sources. Those incomes are casual income. So casual income will mainly cover income from lottery, gambling, horse racing, quiz, puzzles or any kind of games, interest on securities or dividend, income from gift or any income from commission. Now here you need to understand one thing, that interest income, dividend income or commission income will be charged under the head of income from other source only and only if those are not chargeable under the head of profit and gain from business profession. Let me give you an example. Let's say I am doing a full-time business of trading into stock and securities. In that case, whatever dividend income I am receiving or whatever interest on securities I am receiving, that will be charged under the head of profit and gain from business profession. But I'm not a person who is whole time doing trading business and on a side business I'm doing this trading. In that case, this dividend or interest income will be charged under the head of income from other source. So first let's talk about casual income. Where I say casual income will usually cover all type of income which are from games, which will be lottery or card games, or it can be horse race or any other type of online and offline games. Let's talk about taxability of casual income. So all casual income will be chargeable to tax at the flat rate of 30% plus applicable cess. So let me give an example. Let's say you are betting on horse race. In that case, if you are earning 100 rupees, that whole amount will be chargeable to tax at the rate of 30% and what you will get is 70 rupees only. One more thing you have to understand here is you will not be allowed to get any exemption or you will not allowed to get deduction of any expenses which you have incurred to earn this income. Like in a horse race, let's say you have invested 1000 rupees and you got 10,000 rupees as a prize money. So here 9,000 rupees will not be taxable. Rather, the whole amount of 10,000 rupees will be taxable at the flat rate of 30%. One more thing which you need to understand here is the TDS. So whatever income you are earning from the head of casual income, the TDS will be deducted at the flat rate of 30% and you will get 70% income in your hand. So let's talk about next income, that is income from gift. So I guess we all know about gift. Whatever free consideration or partly free consideration you are receiving is known as gift. Gift can be, so whole amount of gift is taxable if the consideration is more than 50,000 rupees. Now here you need to understand one thing. So if my consideration of gift is less than 50,000 rupees, it will be fully exempt. However, if my consideration is above 50,000 rupees, it will be fully taxable, which means if I am receiving the gift of 60,000 rupees, in that case the whole amount of 60,000 would be taxable in my hand. Now gift can be of two types. One can be monetary, one can be non-monetary. Monetary can be easily identifiable by its amount, but in case of non-monetary, it can be movable or immovable. So to determine whether the value of that gift is more than 50,000 rupees, for movable property like stock and shares, you need to determine its fair value. Like for immovable property, you need to determine stamp value. This is how you will determine the amount of gift, and based on that you will determine the taxability of gift. However, government has given certain exemptions which are as follows. First, if you are receiving gift on the occasion of your marriage from any person, so on your marriage occasion, if you are receiving any amount of money from your relative or non-relative, the whole amount would be completely exempted. The second is if you are receiving gift from the will, so that also again would be completely exempted. The third is if you are receiving gift from your family members. Again, there is a wide definition of family members which you need to read and understand thoroughly. But any gift you are receiving from your family member, it would be again completely exempted. And the fourth and the last exemption is there are certain authorities which are prescribed by the Income Tax Act, and if you are receiving gift from those authorities like trust, etc., so again that would be completely exempted. Let's talk about the last one, that is dividend income. So basically you receive dividend when you have purchased the shares or securities from certain companies. So if you are receiving dividend income, that can be from two kind of organization. One, you can receive dividend from the domestic, like India, or which means Indian company, or you can receive dividend from foreign company. Now, if you are receiving dividend from Indian companies, in that case, the total dividend amount, if it is less than 10 lakh rupees, it would be completely exempted. However, if the amount of dividend is more than 10 lakh rupees, it will be, the remaining of the amount would be taxable. But in case of foreign company, the whole amount would be completely taxable. So that was all about income from other sources. Thank you.